Hello from the Chalk team. This is a little update for you in regards to the past and present and predictions for what the real estate market might hold in 2021. The best way to maybe start this is to look at what happened in 2020 and potentially even further back, because we had faced almost a recovery type of market pre-COVID in 2020. We had seen lower inventory that was really pushing that demand in the under $500,000 detached market, along with some of our duplex market. Now, as we went into lockdown, across the country, we saw historic lows for real estate sales, and that is just something that obviously is predictable given the fact that we were told to stay in our homes and not be out and about. But as we got to that 6-week mark, we actually started to see people out again who were really looking for the type of inventory that was on the market. And due to COVID, it definitely kept inventory levels a little bit lower in that first 2 quarters of the year. As we progressed into the summer, we did start to see a little bit more inventory come on, and very market specific. It did create a little bit of more demand. Now, we did see a bit of our higher multi-million-dollar properties, or in that $1 million price range, come down in inventory levels, which actually pushed that market forward a little bit. As we all know, we have been stuck in our homes, and so that could lead to people really seeing that maybe their homes were not adequate to handle their children, their work life that had now all been relocated back to our homes. So as we continued on through 2020, the closer we got to the end of the year, the less inventory we still saw. And that is bringing us now to our present day market. We currently are seeing very low levels of inventory, which is allowing for properties to get a lot of action and agents to kind of be hunting around for properties even before they hit the market. This has not been really seen since 2014. If you might recall that we had a busier market, almost a balanced market, and some of these properties are even falling into a bit of a seller's market. Now, when we're looking at our condominiums, when we're looking at our townhouse sector, the condominium sector is still suffering. We still have quite high inventory levels, and in 2020, we actually didn't hit the same sales numbers that we hit in 2019. And so that is going to continue to affect the market given how much inventory we have. There's still a lot of new construction being built in the condo market, as well as we just don't see as many people looking for that type of living anymore. Given that we're all required to have a little more space in our homes, it is definitely pushing that detached, semi-detached market under 500,000 along quite well. That brings us to predictions a little bit. If you have paid attention to the news over the last few days, the Calgary Real Estate Board has come out with its annual forecast for 2021. What is interesting about it is they're predicting 5% sales growth. So this is the amount of transactions that are going to take place over the next year. We will likely see a 5% increase. In terms of a property gain, they're predicting about 1.5%. Now, we've heard other predictions from Royal LePage and whatnot that have been a little bit more conservative, around the 1%. However, even speaking to our amazing CEO earlier this week, he had suggested that because our inventory levels are a little bit low, we might see better gains than that. Now, obviously, with the XL pipeline being kiboshed by our new US government, that is definitely throwing another economic spin into Alberta that we are not unfamiliar with. We have been dealing with this now for almost 7 years since we had our recession, and job loss is so attached to the real estate market that as we continue to see some of that job loss, that could really affect the sector as well. However, overall in 2020, we were definitely met with scenarios where we were in multiple offers in varying price points all the way up to over $1 million. And this was featured on acreages as well as specialty properties, for instance, like lakefront where there's a small segment really of these types of properties. So that is a promising sign that there really might be a great opportunity if you're thinking about selling and you have been in your home for, that 3 to 5 plus mark, that you're gonna maybe have some equity there. The other thing that's really driving the market is our interest rates. We have seen historically low interest rates and they continue to decline. And often the lenders are going to bring out spring rates that are even more competitive, because that's often when we're seeing our busiest time in the market. Now, presently, we've almost hit a bit of a spring market trend where there's a lot of people out looking, and that's not historically typical for January and February. We often have lower inventory, and we do still have people looking, which can create a little mini boom every year. However, we've seen this to be a little more significant. And again, this is very based on the type of property and location. Calgary has so many different communities, it offers a lot of diversity. So it depends on the overall inventory levels that we're seeing in each community. What is great is when we were faced in 2019, we would see inventory levels that were showing, between 6 to 5 months of inventory in that detached sector from buyers to choose from. This creates more of a buyer's market. When we see levels at 2 months, a little over 2 months, it kind of points to a balanced market. Now, in this market, we're finding that people are really looking for a fully finished product. The more fully finished, on-trend, current product you have, the better that property is really coming to market. We've been doing a lot of staging lately for the last year and a half now, and that has been definitely a huge factor in presenting your property with its best foot forward. But getting back to interest rates, there's a prediction that they're going to stay quite low for a long time. And by quite low, maybe even in 2022, we could see a 1% rise. But right now we're sitting around rates that are as good as 1.549 to that 1.89 range if you're in a high ratio mortgage. So where you're putting in less than 20% down. If you are putting in 20% down, you are still hovering around that very low 2% rate, which is still excellent even compared to, say, 3 to 4 years ago. I have clients who locked in even earlier in 2020. They locked in at a higher 2 point something rate and now are able to even look at refinancing their properties, bringing that mortgage payment lower, because the penalty even to break that mortgage right now is still worth it compared to the savings that they're going to have monthly. So even if we do see a small rise in 2022 in interest rates, it's not going to be this huge increase that we're expecting, because we still need to see overall our GDP grow, and we need to see confidence in the economic markets around the world and both in Canada. And we haven't quite faced what COVID has done to the markets yet. Now, let's talk about towns and surrounding areas. Airdrie and Okotoks have really had a significantly good year. They maybe haven't always seen price gains, but they have seen much more action in a shorter time frame. So your days on the market tend to be quite a bit lower than they were even in the beginning of 2020 and even back to 2019, when really there is still a flurry of product on there from buyers to choose from. We suspect that that's going to continue. Okotoks has a little bit of a niche market where we're just not seeing a lot of inventory. And in fact, we just had a property in Airdrie that went into multiple offers after only a few days on the market. Now that was again the detached market. We've seen strong trends again in your duplex market. We've also seen some fairly good trends in the condominium market, so long as your competition is low. Where we're seeing a real lag in the condo market is in that downtown sector. We've really seen a push from people moving away from the downtown sector because we don't have to be there anymore. Our vacancy rates downtown are at an all-time high, about 30% for office space. This is predicted to continue for a while until we can kind of change and diversify our economic position right now in Calgary and in Alberta. So downtown is certainly not as popular as it used to be, and that segues right into our acreage market. The acreage market has actually seen a really strong amount of inventory move in the last year, which has been a little bit different from other years, given that we've seen such a push to urbanize everything. People are now requiring space. They're really thinking about lifestyle. They're thinking about the outdoors much, much more, because that's basically where we are stuck to. Now, this might swing back the other way where we balance more to an urban position again, but right now, the empty foothills, Springbank, we've seen a lot of transactions take place even over that $1 million range, as people are able to buy up, also sell their homes with equity in them, and then have a very low interest rate as well. So we think that our supply should rise, as it typically does, as we approach closer to spring-like conditions. However, that being said, if people are keeping inventory low in Calgary, then Calgary historically has always had a strong market if inventory is low. We haven't seen a lot of net migration into the city, which has been very typical over the last 6 or 7 years, just given our economic position right now, and that we're not seeing a lot of jobs coming in. We are seeing a bit of a position now for investors coming into the market, but they're not typically looking at our condominiums, which is what they would normally be looking at. We are seeing some properties being flipped and renovated quite successfully, because again, really people who are looking for that finished product are waiting and ready to go. So what does this predict now for Calgary? Well, if we had a magic ball, then I would be happy to rub that ball and tell you exactly what is happening. But it seems overall we're going to have another strong market that's indicative of what we came out of in the third and fourth quarter. We saw, again, strong sales, as personally with our listings now, given that January is almost at its end, which I cannot believe. We've had a lot of strong showings, even more than in November and December, as we continued to kind of go through another little lockdown again. The nice thing with showing your property now is we have very strong guidelines in place to keep you safe if you are living in your property while you are selling your property. Our governing body of Alberta for realtors has implemented that it's only 2 people and the realtor, and those 2 people must be in the same household when they are looking at a home. They're no longer allowing kids into the home. They really want to minimize the amount of people that are coming in. And the difference for how we are showing nowadays is typically we would always ask our clients to leave all your lights on, and then agents would go around and turn them off after they're showing. We're now finding that our advisement is to leave your lights on, leave a few closets open, and really helping the buyers and the agent minimize what they're touching. The other positive is when you go to book a showing, you are prompted already when the agent requests it to then confirm with that agent that their clients have not had any COVID symptoms, have not been waiting for a test for COVID, do not currently have a positive result, etc. So we really have seen a strong amount of professionalism in this side of the industry, where we're doing our best to keep you safe while you sell your home. Now, if you're potentially looking at buying right now, it is definitely going to be a little bit tenuous depending on what product you're looking for, because we have that shortage. That typically means right now we're seeing new product come on the market and we're having to go and look at it ASAP. Whereas maybe beginning to mid, even into the third quarter of 2020, we didn't have to rush out to see a product. And that is currently where we are sitting in the market, that there is a bit of a rush and a push to see new product that looks strong, that looks good, that doesn't have any impediment. Location is definitely a huge factor, and we continue to see that being a big push for yards, RV storage, bigger garages, office space in the home. So we've been really focusing on, even if you don't have a formal office space in your home, creating that area where we can show potential buyers that here is where it is. If you're thinking about selling, it is often a quick market. Now, that being said, it is definitely market specific, depending on where our demand is. But we continuously see as realtors and have conversation with realtors in Calgary and surrounding areas that here's what they're looking for. Here's what they can't find in the market. Does anybody have anything like this coming on the market? So if you're considering maybe 2021 as a move, we would be happy to come in, chat with you. We can also do things virtually as well and give you an update on where your house is positioned in the market and where you're sitting in that market segment. So overall, the economic forecast is somewhat positive, and we haven't really had a somewhat positive outlook now since the recession started. Like I say, we did see some recovery in the end of 2019, flowing into 2020, stopped by COVID, and then continued on now successfully throughout the rest of the quarters. As always, we look forward to helping you, and we look forward to seeing you. We are deemed an essential service, and we are very thankful for the strong year we had in 2020, helping our clients find just the right homes. We wish you the best in 2021. We hope you guys are doing well, and thank you so much for your time. Again, if you have any questions, reach out. We're here to help. We also are currently in the process of making a services list. So if you're looking for contractors or if you're looking for painters or whatnot, we also want to be a resource to you in that regard. The other exciting piece of news is Denise Chalk is now doing all of our staging and interior design. So even if you're living in your home and you're having some challenges around how to use different areas more effectively, you can reach out to us, and Denise can come in and give you a consultation and help you really find the maximization of what space you currently have in your home. The one other thing that I wanted to get at is a little bit of gossip. You may have heard as well that we are looking at a large amount of defaults in Alberta, potentially leading to a lot of foreclosures. What we found really interesting is when we were speaking to our CEO of Royal LePage Canada, there was about 735,000 people that did take the mortgage deferrals over the COVID period. Now, 65% of them have resumed paying their mortgage. So currently, we haven't seen that foreclosure rate really skyrocket. If you also have heard a little bit of CMHC's forecasting, now that is a federal insurer. So they are backed by the government of Canada, and they have said overall we're going to see a 48% decrease in prices in Canada. That is basically our worst case scenario. And to me, as you talk to different lenders, different industry members, and other people who are really looking at market forecasts, that's not currently the trend that we are facing, which again is exciting news. And to me, I call it a little bit of gossip because it's definitely something that can be a hot topic number that you'll hear out and about in the news. So over on Calgary, we'll look forward to potentially seeing our 1.5% gains on the pricing and 5% more sales this year. Thanks so much.